Hey, it's Mac with PriceActionTradingSystem.com, and it's Wednesday, it's December 18th. This will be our chart lesson for today. And real quickly, this is going to be my last chart lesson for the year. We won't be back till next year, 2025. So um, this is going to wrap up our day, our week, and our month and our year all in one chart lesson here. So. Uh, I I probably won't read email much. I'll just, if I do, it'll only be um, emergency type issues if somebody's having a problem with something with the website or something of that nature. But I won't be answering trading questions or anything like that. So please hold those till after the first of the year. Don't send me those. I would appreciate it if you would uh, do that for me, and so I don't come back to a barrage of those kind of emails at the first of the year because I'm probably not going to be answering them. Um, I'm going to take some time off. Again, I'm still having issues with my mom, and she's deteriorating. And instead of getting better, she's getting worse. And so I'm going to imagine a good bit of my holiday is going to be spent dealing with that as well. So, but anyway, let's move on to the chart lesson. Very bearish day based on FOMC news that came out today. They did cut rates by a quarter of a point, and obviously the market didn't like it. But we probably needed this capitulation here. My guess is we'll rally off of this. This looks really overdone. We're definitely oversold on the daily chart. You can see we shot way past the lower brown line, and so we were definitely way oversold at one time. We got close to the lower trend line, and that could be off a hair. That could be. See, we already have gapped open here. Traded down and filled the gap and have started back up again. My guess is we'll rally off of this. I can't see it going much lower. Now, I could be wrong, but just looking at this chart here, I'd say we'll rally some off of this. But anyway, there it is on the daily chart. Very ugly. It looks just as bad on the 2000 tick chart. So let's flip over to that chart and we'll get through the trades and we'll wrap this day and year, day, week, month, and year. We'll wrap it all up today. So anyway, let's flip over to the other chart. And here it is. You can see we started out really flat and sideways, and that's not unusual on a FOMC day because people are waiting to. People don't want to commit to much before that report comes out, and you can see marked. There was actually a 730 building permits and crude oil. I marked it off, but it didn't really matter. Those are medium. So the big one was the FOMC today. It came out right in here. And you want to be flat an hour prior to that one because sometimes, just like you can see here, let me zoom in here, you can see how flat we were starting about 11 o'clock all the way in. I mean, almost 2 hours the market did nothing across there. It's still really, I mean, you can see that. And you don't want to get stuck in that. So that's why I'm always saying be out by noon. And then because you don't want to get stuck in that and take a loss when the news hits, and you can see it was pretty volatile there for a few minutes, and then the bottom just falls out. Looks like it might find some support, and boom, it falls out. It just continues to go lower and lower, and even into the close. I mean, we closed. Well, we recovered a little of it there, it looks like, and we're recovering now. And I suspect we will recover a good bit of this, but before the end of the year. But we'll see. But very bearish day. Um, you lose part of this trading day because you got to be flat, and then you got to wait for the news to settle down. But the news came out at, 7 o'clock came as we're topping out here. And notice you had a channel working up. You got to close outside a couple of legs to a new high, and then you made a lower high there. I like going short on that lower high. Let me get that off there. I just marked that to mark the news, but that's not one yet really. These are medium. Building permits and crude oil, don't worry too much about them. I like going short on that lower high. If you catch that, you're probably done for the day. I mean, you should easily get a runner on that. And if you just go to the first bullish bar that gets a break above it, it's probably going to be right there. Well, there's almost 20 points. I mean, it doesn't get much better than that right there. Um, that's the kind of morning you like to start out. You start trading at a little after 7, and you're done by, if you exit it on that bar, you're done by 8:30. Hour and a half's work, and you get 20 points. I mean, even if you're only trading one contract, um, I mean, you get it's not a bad payday for hours worth of work. And then we get the break and a couple of legs down. Then we kind of just go flat here. This is more acceptance of this price and rejection, but eventually it takes off. But notice that you get two legs down. You get a little two-legged correction, then another leg down there. And then notice we make a new high right here, a new swing high. Technically, that's not a new swing high, but it looks like we went higher. It looks like two swings up right there, but it's really a second entry short that fails right there, and that's where you're looking for a reversal. That's the reason I really like it. Um, you might say there's a second entry here because there's the real new high, and then you get a first entry and then second entry. But I wouldn't enter there just yet. It looks too sideways. But when we touch this one, I think you can argue there's a 1, 2, 3 triple test and maybe go along there. But if you didn't go along there, you definitely can say, hey, you got a triple test right here, a nice signal bar. You actually had to enter on this bar, but they have a matching low, so you can enter there too. So you can still enter that. And it takes off from there. Um, I almost made this one green just simply because you're not getting rejection there. But once you get that triple test, I think you can take that trade. It's 5 ticks, so it's very low risk. It's got a 2-bar matching low. Really, there's 3 of them across there. And so there's strong support, very low risk. You can get in that with an 8-tick rule, less than the 8-tick rule, and it takes off again. And again, you may not get, if you notice that it goes here and then it gaps on that one, so it takes off. So if you get in that, there's no reason you shouldn't get a runner on this trade because it never comes back. It just gaps over and takes off. So there's no reason you shouldn't get a runner on that one. And look at it go again. If you just wait till the first bar that closes outside, this bearish and gets a low, a close lower. excuse me. Excuse me. I'm sorry. If you get a close lower, that's going to be right here on that second entry short. So again, you get another 10 or almost 11 points there. So, and still you're done by 9 o'clock, 10 o'clock. I mean, that's the kind of trading we like to have. And so, anyway, we're still working up, and you get the first close outside, and you get a first entry, and it's a second entry long right there. You might have got shaken out of this, but you wouldn't have got stopped out. It still goes higher, and you could have got some more right there on that one. If you're already in this and you've got a runner, though, it's difficult to do that. It's difficult to, if you're looking to exit and then there's another trade setting up, you'd be better off just to hang on to what you got. But you may not have wanted to risk it on that second entry short there. But it turns out to be a failure and takes off. But you can't really trade a failure there. That's not where we're looking for one. But it still has a long way to go, all the way back to the top. We top out. We try to go higher once, twice, it fails, and we're turning down. I just don't see a good opportunity to enter there. It's tempting to enter right there, but that's a breakout pullback short. But I'd want something better than that. You got a 2-bar matching low. If it breaks below it, it's probably going to drop on down and give you a scalp. But I would wait. And you just really don't get a chance to enter that one. And then we come down here, you get a close outside, a new low. There's also a double bottom across there. That's the midline of the chart of the range. So a place you might figure you get a bounce. I'd prefer to wait on a higher low. So that's a little risky, but it breaks lower and fails and turns up. If it breaks above that, it's probably headed back to the EMA, high likelihood. But again, you're better off to wait on the higher low, and you just don't get one. So if you didn't enter there, which is a little risky, then you don't get a chance to enter this one. And I don't see any other entries all the way up until you get a close outside a new high there. Actually, you just get a break of the trend line here. I'm sorry. and you get a move down, close outside, 2 legs down. So that's a second entry long. Notice the new high, first entry. And so it triggers on a break above this bar, but you can't use it. But because there's 2 bar matching low, you can go long right there. And you're just looking for it to make a new high. And that's another nice move up, really. And you get a second entry short there, but not a very good signal bar, and the bottom falls out of it again. But then you get your break, move to a new low, and then that's taking you into the 12 o'clock. And you can see there wasn't anything after that, so you're better off to stay out of it. And I'd say you probably wait 15 minutes because this thing is still really dropping. You can see it's starting to go sideways here. So you might have said, okay, by this point we're all right. That's just a first entry. There is a triple test. If you entered that trade right there on the confirmation of that trend line, I wouldn't have a problem with that. You probably could argue for it to be red, but usually I tell you to be out of this for 15 minutes, but it's obvious now that we're kind of settling down a little bit and the trend is down, so you might go short there. We drop on down. I wouldn't call that a close outside. I don't think that's convincing enough. So I think this was the first close outside. And you do get a first entry. You actually get a second entry there, but you don't have a break of that channel. And you notice it gets a break and then the new high. And you just don't really get a chance to enter. It's tempting to say, okay, we got a 2 bar matching high. Maybe you enter below that on a break, but then it doesn't break below it. And you got an inside bar. So you just can't enter there. Drops down, runs back up, and then we just start working sideways here. I don't see anything you can enter on there. Drops back down, makes a double bottom, but again, I don't see any reason to go long. You could draw your channel here, and you do get a break outside. And a new low, but you don't want to be picking bottoms here. Well, you got to be real careful. And notice it didn't go very far. You do get a second entry short here, but that's your signal bar, and it's just not good enough. That one right there was super tempting, but in a strong downtrend, when you're still making lower lows and lower highs all the way down here, and I'd say sit tight and just wait and see what happens. At least wait for a higher low, and you don't get it, and then the bottom falls out. And that's why waiting right there for a higher low might be a smart idea, just to be sure. And you can see we're not even close to being done yet. All we do is start up a brand new channel here. This is actually moved some. You bounce here, first entry, make a new high. That's a second entry short. I like going short on that one. Runs down, you're running sideways. There's another second entry here, and it's also a triple test. Right at the midline, right at the key, their EMA. Those are 2 minor key entry points. I say go short there. It looks like it might fail, but it ends up dropping on down. This looked a little like an overshoot. I don't know that it was or not. Maybe it was. I looked at it like it was, and you see we did get about an equal close outside over here. But notice you're working up and you get a first entry, and that's a second entry short right there. Fairly decent signal bar right at the key entry point. You're looking for a retest of the lows. Boom, off it goes. And then you get another 2 legs back, and that's another second entry. It's a little sideways, but this is a strong trend. I wouldn't be afraid to go short there. It's a little close to the lows. I went back and forth about whether or not to make that green. You could argue for it to be green, but I marked it red. It's such a bearish day. The news was the market's just really selling off here, so I think you're probably safe to go. If it would have broke higher and turned down, you could have entered that on the engulfing bar and given yourself a little more room, but it didn't break higher. So, but you could also argue, notice how it went higher, 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 that there's a triple test there. That was the other reason I leaned towards being red on that one rather than green. And now you get a for sure break. If you're not sure about any of these others, now you got a for sure one. You get a first entry there, and that's a second entry short again, and off it goes. And that runs all the way straight down into the 2:30 hour, and then that was that was it for the day. I mean, this thing just kept going. This is a very bearish day. Um, very bearish day. We hadn't had a day like this in a long, long time. We were overdue for some kind of correction. I mean, it's just the way it is. But there it is, a big picture. I mean, it's hard to even get it all on one screen. Trying to get it out of the news item up there. Just move it over there like that. But you can see it. It was sideways waiting on the news, and once it came out, I mean, maybe they obviously the market didn't like the quarter point drop. Maybe they were expecting it not to drop. I mean, there was some talk that they may not drop it another quarter point this time um, because there's signs inflation still going, is still higher than what their target is, and I just think they're between a rock and a hard place. If they don't lower it, they're going to send us into a recession, and if we're not already in one, and if they do lower it, then inflation is going to keep going and eating up our dollar, and so we're in trouble no matter how they do it. I think they've just got us between a rock and a hard place. So anyway, there it is. Not much else I can say about today. There were some good trades, especially late afternoon. Um, these were all second entries, just about with the trend, as the market was just tanking. So those are the kind of trades you want to see. I wish we could get trends like this either up or down every day, because uh, the second entries at the key entry point are almost sure things. So anyway, I'm going to wrap it up, and I'm going to wrap this year up, and this will be our last chart lesson for 2024. And so again, I'm up in the air about whether I'm coming back on the 2nd or the 6th, because the 2nd falls on a Thursday, and I don't know if I'm going to come in for a Thursday and Friday, a day and a half or not. It just depends on how my vacation's gone, how busy I've been, and how stir crazy. If I've gotten bored and stir crazy, I may come on in. If I hadn't, I'll probably wait till Monday the 6th to come in. But anyway, I hope all of you have a wonderful holiday season. Merry Christmas to you. Happy New Year. Um, I'll see you in January 2025. So I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.